Hello, and welcome to the November update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. Wow, October was a bad month. October has a scary reputation, certainly with Halloween and everything, but also with the markets, and it fully lived up to it. U.S. markets were down between about 5 and about 9%. International markets were down about 8 or 9%, and even fixed income lost money for the month. It was a bad month and there was really nowhere to hide. So what the heck just happened? In a word, a lack of confidence. There were a couple of things that made investors step back and say, wait a minute, maybe things aren't quite as good as we thought. We saw a couple of the marquee companies, the FANG companies, come in with results that were good, but not quite as good as investors had expected. And that caused some of those stocks to sell off. Given how big those companies are and what a big part of the indices they are, that actually rocked the indices more than it might actually be warranted. And then beyond that, we also had some signs that maybe the economy wasn't growing as quickly. We see housing starting to roll over. Housing sales dropped off. We see retail sales disappointing for the second month in a row. And when we look at all of this, we say that things are still good, but maybe things aren't going to keep getting better quite as much as we thought. On top of that, of course, we have the political risks. We have the midterms here in the United States that are making everyone more worried and uncertain. We have a lot of risks coming up in Europe. We have the British potential exit from the European Union. We have Italy perhaps leaving. We have Germany's chancellor saying she's not going to run again. In other words, for a major part of the global economy, political risk just ratcheted up significantly over the past month. And then, of course, on top of that, we have the trade conflict. We have tariffs. So when you add all of this, and when you factor in that interest rates are going up as well as the Fed responds to the fact that the economy is in fact quite strong, all of this makes investors say, we're not quite sure what's going to happen next, and maybe we need to take a break. And that's exactly what happened. But the thing is, when you get down to it, when you strip away all of the uncertainty, conditions remain quite positive. Yes, growth may be slowing, but it's still quite strong and likely to stay that way for a while. If we're going to have this kind of a reassessment, this is exactly when we want to have it. And looking forward, there's reason to believe that things might actually improve. First of all, you look at the midterms, one of the major sources of uncertainty. They'll be over by the end of November. Come what will, they will be over. And the thing is, of the two possible outcomes, the Republicans retaining control in a divided government, both have historically not been bad for the market. So the midterms, that uncertainty will go away. We can expect to see some political process in Europe. We can expect to see the Fed clarify their intentions. In other words, a lot of the headwinds out there are likely to subside. So what does this mean going forward? Might we see more volatility? We certainly could. But at the same time, many of the risks that drove markets down in October are starting to mitigate. And we're entering into what's historically a positive time of the year. So with all of that, we will see what happens, and I will talk to you next month. Thanks for listening.